Welcome back to Mostly Growth, the number one podcast in product monetization. Are you going to be a target for the SpaceX IPO?
2 trillion, huh?
You a buyer at that price?
This is not investment advice. I've gone so deep down the rabbit hole. And so this episode is going to be an all too early SpaceX IPO breakdown because their S1 is still confidential. And so the S1 is what you have to file with the Securities and Exchange Commission, laying out the story of your company along with your audited financials of at least 2 prior years. What's interesting about this one is they've been around for so long. There have been tenders that have happened at a regular cadence that a lot of the outside world actually has a grip on what their revenue figures and profitability figures and targets are.
Yeah, I mean, they're basically acting like a public company, even though they're not officially public yet.
And so to set some context in terms of like what we're walking into, me and you, Kyle, have covered before, who do we think is going to IPO next? And it's a whole host of very capital intensive companies, some hungry hippos here. And so it looks like SpaceX is going to be the first one out of the gates, followed by either Anthropic or OpenAI. So this is going to be an absolute blockbuster summer and fall for tech IPOs.
Well, can you remind me how much capital are they probably going to raise?
It looks like they're going to raise, this is just SpaceX, around $50 billion, which will be nearly twice the amount any IPO that has come before it has raised. So Saudi Aramco in 2019 raised $29 billion at a $1.25 trillion valuation, but this will be the largest public fundraise of all time.
And is this to go to space exploration, colonizing Mars, internet service, Twitter? What is this company?
There's a lot here, Kyle, but there's something for everybody at home. It's important to remember that this started over 20 years ago, and it was funded from the proceeds that Elon made from selling PayPal.
So this is a company Elon actually founded, it's not like a Tesla situation where there was a company that he came along after, helped make it successful, but like he legit founded this one.
Yeah, he was the guy that founded this one. And there are stories about him like going out and celebrating and having drinks after with the PayPal people. And he's like telling them about this idea and how he plans to make a reusable rocket.
And this is in 2002. So this is before Tesla even.
Yeah, which is wild to think. Like in my mind, and I'm sure a lot of people out there have the order as Tesla and then SpaceX, but technically SpaceX has been around even longer.
He's gotten other funding since. Like who else is in this business?
They've raised about 12 billion since, over 30 rounds. So by my count, it's also the most rounds a company has ever done. Second place is Palantir.
So if someone puts SpaceX investor on their LinkedIn, they're one of a lot of people.
The cap table is probably the messiest cap table of any company out there. I'll put it that way.
Yeah, that sounds like a beast to manage. And all right, so their goal, initially the idea is reusable rockets. This is the everything store at this point. I feel like they're as diversified as Amazon is.
The combined entity that's going public, it's called SpaceX, but it includes the SpaceX rockets and its launch infrastructure to send shit into outer space, the Starlink broadband, which is basically internet without any sort of cables. It includes XAI, which is the large language model that includes Grok, and it includes X, the social platform as well. And by the way, a $60 billion call option on Cursor. So eventually we'll probably include Cursor as well.
He is hiding some stuff in here. I feel like the X is like, this is a failing business. We can put it into a growing business and no one's going to notice.
Well, remember in the past, he was criticized for buying and subsidizing his brother's solar panel company. And so there is somewhat of a business case for each of these. Not all of the arms of it are as profitable or profitable at all. But maybe I can take you through at a high level how the company makes money.
Before you do that, what's the single largest business unit of this thing?
It is primarily a internet company that makes internet in space.
So this is like if Comcast were to like have a better marketing person and say that they're a space Comcast?
Kind of, but not really, because it is pretty wild that you can take one of these like iPad-sized panels and go anywhere. So I went on a safari with a Starlink and was able to use it to help close the part stack deal. That's when it was happening. So I'm walking around in middle of nowhere, Botswana, more than 6 hours from any airport, a puddle jumper flight away, and I'm able to get internet connectivity. So it's even more extreme than just normal cable.
That's pretty wild. Yeah, these things, they're not that big.
A few moments later.
So I have some cords around it, but this is like the size of it.
Oh, so that's like this, yeah, size of a laptop or something.
It's a little smaller than a laptop, but bigger than an iPad. And this is the mini, by the way. You can get a larger one that's a little more reliable. What was kind of frustrating, though, it's like magic, so it's hard to be angry at it. The connectivity was different, like in the afternoon, than it was in the morning, based on the area that Earth is turning and the satellites. So the week we were there, it was way better connectivity where I wouldn't lose like the connection when I was typing or on a call or something in the morning. 3 to 5 was like a total dead zone. So it's not as reliable as just Comcast, but I mean, there wasn't even running water where it was.
I remember doing a podcast with someone who was like on his boat in the middle of the ocean, but like on a Starlink connection. And so it is pretty amazing that they can get like pretty fast speeds in remote places, but that reliability makes a big difference. Like if this is something that you could like replace your existing internet service with, or if it's just for special situations that don't have access to internet.
And that's one of the areas that they say is like addressable eventually, like maritime services. It's like instead of using that go-go connect that sucks on United that like you pay $20 for and it never works. Like this could be a better version of it. All of this is possible just because of the launch services. And so that makes about $4 billion a year in revenue. It's the core of everything. And they do more than 100 missions per year, and they use the Falcon 9 rocket. Before SpaceX, it's like if you took a trip in a car, you'd have to basically like blow up the car after, like never use it again. So it's the first reusable rockets, and they use those to put the Starlinks into space.
Eco-friendly. Well, so what I thought was interesting here, I did some Googling around like the commercial launch pricing because they do so many of these launches. How much do you think it would cost to do a commercial launch on a Falcon 9 if you were to do a dedicated launch?
$10 million.
So it's 74 million, few bucks off. The payload capacity, I guess, is 22.8 tons. What I thought was interesting is on their website, so instead of buying a dedicated mission, you can do a rideshare. You call it SpaceX Rideshare program.
The Uber pool of space.
And that price is actually much more affordable. So that is 350 grand for a payload of up to 50 kilograms. And then there's additional pricing for heavier things. And they put a pricing calculator on their website. So I mean, all these SaaS companies that are like afraid to publish their pricing when it's like $1,000 a month. This is $350,000 and they have transparent pricing.
We will put your shit in space and we will tell you today how much it costs.
I think you can like order it online.
So I want to pause here though, because people listen to this podcast, we talk about the railroads all the time. Ben loves a good railroad story and how economies are built on that. Think about it like SpaceX is creating the railroads to space, right? Like Starlink is the first thing that they've been putting up there and monetizing, and it's a cash cow of the business. $10 billion a year in revenue from that. So the launch services itself, infrastructure, $4 billion. And then the satellites, $10 billion a year in subscription revenue. What else could they use that for, right? Is this the new railway to space?
Launch services, is that a profitable business line or is that a loss leader for their satellite business?
That's a loss leader for the satellite business. Now, we should get better visibility, I hope, into the gross profits of this. We talked about in our last podcast how a lot of these AI companies should do something similar to Toast, where it's like, this is the subscription revenue, this is the payments revenue, this is the hardware revenue, and then show which ones are actually profitable or not. It appears that launch services, at least at first glance, is not profitable, but Starlink is very profitable.
The launch services are basically the cost of doing business for the satellite internet company. They do sort of have these dedicated missions or this rideshare program to try to like make that a little bit more efficient, a little bit more profitable. So they're subsidizing it less. But really, like, it seems to me like this is a business that was built with this concept of reusable rockets. And but they really found money in selling internet service where it wasn't reliable. First, it's just a means of having the internet business.
I would love to go back to 2002 if they were thinking that this was an industry means to sell internet. I think there are a lot of cool business stories out there about companies that like set out to build this one thing and then they figured out the real monetization engine was something completely different.
It was kind of like Amazon like starts selling books and then they realize they have this like cloud computing capacity they can sell to everyone else, and now that's like their business.
That's wild. But yeah, so Starlink has 63% EBITDA margins. It's growing with consumers like myself. I showed you that I have one. Also B2B segments like aviation, maritime, and government.
Hey, thanks for listening. We'll be right back after a word from our sponsors.
When I looked to set up my first CRM at Growth Unhinged, I knew I wanted something that was actually AI first. The world has evolved. Most CRMs are still stuck in the 90s. I found Lightfield, the CRM that remembers everything and does the work for you. It joins all my sales calls, reads my emails, and has the full context on every account. At this point, Lightfield knows my deals better than I do. I haven't had to set up a single CRM dashboard. Instead, I simply ask Lightfield questions like, which deals in my pipeline are most likely to close, or who do I need to follow up with today? It even automatically prepares me for meetings with a personalized daily briefing, and setup was quick and surprisingly painless. Lightfield is my sales coach, RevOps analyst, therapist, EA, all in one. See Lightfield for yourself with a 14-day free trial. Connecting data from your inbox takes just 5 minutes, and you can migrate in under an hour. Go to lightfield.app, that's lightfield.app, and use code MOSTLYGROWTH to get 3 months free. When I went all in on my newsletter, Growth Unhinged, last year, I quickly decided it was time to make the switch to beehiiv. I chose beehiiv because they're serious about powering the internet's best newsletters. beehiiv's all-in-one platform brings together newsletters, websites, and every tool you need to grow and earn. And they keep making it better. You can now launch, host, and monetize your podcast entirely on beehiiv. You can host webinars on beehiiv, and you can access beehiiv through the new MCP. I just use beehiiv's MCP in Claude Cowork to audit my site, prioritize SEO fixes, and analyze subscriber trends. It's my newest obsession. If you care about owning your audience, beehiiv is a no-brainer. Try beehiiv for free by going to beehiiv.com. That's beehiiv.com. Use Kyle30 for 30% off your first 3 months.
Ali and the team at Tabs are building something that directly addresses one of the biggest headaches I see finance teams deal with today. Pulling data from your ERP, your CRM, your FP&A tools, and your usage systems and actually making it all work together. If you're running usage-based pricing or complex contracts, you already know how this usually plays out. Contracts live in one system, usage data lives somewhere else, billing happens in another tool. RevRec gets layered on top at month end, and finance ends up just reconciling everything by hand to close the books. This is exactly the problem Tabs was built to solve. Tabs is an AI-native revenue platform built for controllers and CFOs. It brings together data from your ERP, CRM, and real product usage into a single system of record. From there, it automates billing, collections, and revenue recognition without finance having to duct tape workflows together every month. If usage-based revenue is core to your business, this is the future of how billing and RevRec get done. Go check them out at tabs.com/run. That's tabs.com/run.
So you bought the satellite itself, which is like the ticket to entry, fairly like reasonably sized, easy to buy. How much does it cost you if you actually want to use the internet, and like how flexible is it to turn it on and off?
I was on the $50 a month plan, and then we went over. So I think that week I went up to like $120 for the month. But then when we got back from the trip, I turned it off and I haven't turned it back on. So I was out like $600, I think, to buy the hardware. And then I ended up paying for 1 month, but I haven't paid the subscription since because I haven't been traveling.
They seem to split their plans into, they've got personal plans and business plans. And then within personal, they have residential, which I guess if you're like out in the middle of nowhere and you don't have a good internet option that's fast, you can go with the residential service. Or you've got Roam, which is what you're talking about. They position that as for RVs, nomads, campers, and people working on the go. But that one seems like a high churn business. Maybe that's more one that's like for the virality of it all. Like I have a hard time imagining that's what they're building the business around.
I think it's for the people in parts of the world that don't have reliable internet on a regular basis. So if you think about how many areas in, say, Africa and parts of South America that just don't have access to the equivalent of a Comcast, this is so much better than anything else.
Yeah, so the residential one would be essentially like recurring high retention rate business. When you look at their pricing page, the initial pricing seems pretty similar between residential and Roam. They both start at $50 a month, but residential is priced based on the amount of megabits per second. So if you want 100, 200 or their max plan. So it's speed based, and they position it as having unlimited data and 99.9% uptime. And then the Roam business is based on consumption. So it's how many gigabytes of consumption you use while you're roaming.
That residential plan is actually cheaper than my current residential plan. It's got me thinking.
Maybe Roam is the on-ramp. Acquire someone on Roam and then flip them to residential.
And the more satellites they put in space, the better the service gets over time. So they can amortize down those costs. And then you have more people who are probably willing to have this service on a regular go-forward basis. But like, I'm near a city, I'm not exactly the target customer at the moment.
And they've got, I think it's 10 million Starlink subscribers.
That's correct. And that's the number that you want to extrapolate out for the majority of their future revenues from this. And so they think it'll roughly double year over year to about 20 million.
If you do believe in the possibility of where this could go, I mean, there's literally like every household is a candidate for buying internet. A lot of households, I should say, are candidates for buying internet. So like there's a massive TAM potential if they can expand probably into residential and business service, but probably more work to be done there. But we should talk about, so 14 million of their revenue between launch and Starlink, but they have this whole AI and Twitter arm. Like, what does that look like?
So the X/Twitter arm seems to be doing about 5 billion in revenue per year. I'm not exactly sure how profitable that is. They cut a ton of heads. It's a combination of ad revenue and then the like $8 per month subscription in order to be verified and choose your handle and whatnot. And then they have the data center business along with the large language models. And so I think the premise of why they want to buy Cursor is that business is not nearly as commercially viable as, say, like an Anthropic or an OpenAI. It's only 1 or 2 billion, but they already have purchased the compute capacity so they could plug and play with something like Cursor to take advantage of that. And that's like the synergies that I think a lot of the businesses that are wrapped up in this have. Like, oh, one over here has excess capacity and is really good at this thing, and the other one over here could help this business unit do that. And so it's the sum of the parts are better.
Yeah. What I found strange though, so this business, it's estimated to be 5 billion. Twitter alone at its peak before it was sold to Musk was around a $5 billion business. And now what we're kind of saying is Twitter's now X, and X plus all this AI stuff Musk is doing, it's still about a $5 billion business. So like that number feels really small when we can compare it to Anthropic's revenue run rate. And if we strip out the X proportion of that revenue, like they're really nowhere near OpenAI or Anthropic.
They're way behind.
All right. So SpaceX really does need a Cursor if they want to have this AI story as part of the business.
And by the way, I think XAI is burning around $1 billion per month. So there's some money that needs to be had in order to keep this rolling.
It's a satellite internet company that is made possible by cheap rockets that is subsidizing AI.
Correct.
How does AI fit into SpaceX? Like, why is that better in this overall business versus a standalone business unit?
So this is the piece that took me the longest to wrap my head around. Okay. So I'm going to sound like a crazy person saying this, but Musk wants to use the SpaceX infrastructure to build data centers in space.
Keep explaining.
It would allow for power to come from solar energy more directly because you're closer to the sun. And so you bypass Earth's terrestrial power grids. The promise here, Kyle, I did not smoke anything before this, is to harness the sun for limitless energy to fuel the AI era. So you unite the Starlink satellites and AI in one structure.
How does the power come back down to the Earth?
I'm sure there's a good explanation.
The satellite internet combined with like the sort of bandwidth needed to run AI, I guess kind of makes sense. I'm not technical, but like I could see a path there. I just don't know how it all works technically. It's so over my head.
It's quite literally rocket science.
You've been waiting to use that this entire time. This is a business model that's, I guess the AI component is the growth story that people are maybe betting on, or maybe they're just totally ignoring and just saying is upside. That's how SpaceX makes money. Where are they in the IPO process? What's the sentiment looking like there?
So they've confidentially filed, like I said, and then a couple weeks before you start your roadshow officially and then go public within usually 2 to 3 weeks after that, you have to file your S1 publicly, which means people can look at the numbers. They've already picked, it sounds like, Morgan Stanley as the lead left, but it sounds like there could actually be technically 3 lead left bankers here. It looks like they will IPO at the start of June.
Well, didn't they require Morgan Stanley to be like using Grok in order to become their banker?
Yeah, that's the only thing worse than making like $1 billion in fees.
I mean, I guess I'd be willing to make $1 billion in fees if I had to use Grok. Musk seems really good at taking money from one pocket and putting it into another pocket.
Yeah, and what's wild about this is that it's going to create this vertically integrated entity where if you add up all those parts, they're going to ask for probably 1.75 trillion in valuation.
$1.75 trillion valuation for, I'm just going to say it again, Comcast in space.
Yeah, that's one way to put it. 1.75 trillion. It would make them the 7th largest company in the world by market cap.
Where would that fall versus Tesla?
Tesla's would be below it. Tesla is 1.25, so it would be number 10.
Let's play this forward. Is SpaceX then just going to buy Tesla?
Conspiracy theory CJ can't come out and play anymore. I think that within a year, SpaceX buys Tesla. They've already bought the ticker ELON.
No way.
He already bought the ticker for that. And what this would help with is a lot of the governance issues that he's been having. Because people are always complaining, like, I'm a Tesla shareholder, but you're spending like 50% of your time at Twitter and 30% of your time at SpaceX and all these other things that you're doing. So having them all under one roof would make it hard to criticize because it's a combined entity. And also, by SpaceX going public, it allows Elon to have a mark-to-market valuation, right? Because valuation every day is the price of a share times number outstanding of the company to use as currency to do the transaction. Because to date, he's been criticized when he buys his own companies as being like, dude, you just literally pulled that number out of your ass. How are we supposed to feel comfortable about that? Like with the Twitter deal, right? It's in the private markets and it's between two affiliated parties. That's not really an arm's length transaction. So it'll allow him to, I think, free up a lot of bandwidth to do whatever he wants within it. And also, like, you know how hard it is going to be to figure out which business units are doing well versus poorly?
What's wild to me is the trend that it gets pushed by activist investors is to often like unbundle these big conglomerates into their own business units because the individual business units like would be valued higher than the combined entity, right? If they're standalone companies. But Musk is going like the complete opposite direction.
History is just bundling and unbundling. But to your point, the majority of M&A transactions like this have played out where you unbundle because you think that one business unit is being kind of pulled down by the multiple that a different business unit is getting.
So does this only work when the combined entity is growing really fast? But if certain business units start to shrink or, stabilize, and then others are growing quickly, but like not quickly enough to make the overall combined entity growing fast, like could he bundle in as Elon and then unbundle again?
So I think this one is less about growth and more about access to capital. So Tesla is an extremely capital intensive business. Running data centers in space is an incredibly capital intensive business. Creating rockets and having the launches for it, that takes a lot of money. And so if you can pool capital and get a lower rate by putting them together, I think it's worth it. And like we mentioned before, there are material weaknesses in certain aspects of each unit, right? Like XAI has a ton of compute, doesn't have a lot of customers. Tesla seems to be selling a ton of cars, but also wants to do these humanoid robots. Could you use the warehouses where you're developing the Tesla parts to do the humanoid robots and also to build spacecrafts in there? Maybe. And like, I don't think there's any human on Earth who knows more about factories for producing these things than Musk. So I kind of get it, but as like a financial person, I'm like, holy shit, this is a Russian doll with 7 layers.
Separating Tesla out of it, SpaceX alone, you had said you thought might be valued at 1.75 trillion, making it the 7th most valuable company out there. I think we talked about 20 billion in revenue this year. That's a pretty high forward multiple on revenue or a current revenue multiple?
So they're forecasted if you go in the next 12 months, probably something around 28 billion. A lot of it is driven by the subscriber growth in Starlink. That is the true engine behind it. And so if they get 1.5 trillion as a valuation, that's a 50x forward revenue multiple. 2 trillion as a valuation, that is a 70x forward revenue multiple. So the median tech company today is trading at 3x, and the top 10 of like the 142 I track each week is trading at 14x. This would even be higher than Palantir, which trades at 50x.
Compare this to Anthropic. If Anthropic were to be at a 50x forward multiple, what would they be worth?
Oh man. Well, what was the latest number that they were approaching 40 billion in ARR?
Somewhere around 40 billion, which means by the end of the year, who knows? Maybe 80 billion by the end of this year? I don't know.
At this rate, Anthropic is going to also IPO above $1 trillion. It's just wild that a company this large is going to receive a revenue multiple this big. So NVIDIA to date is the largest company trading at the largest revenue multiple, like relative to its size, and that's 18x. Tesla's trading at 14x. These are multi-trillion dollar companies. This company is trying to trade at between 50 and 70x. So it's like, holy shit, what do you have to believe now in order to underwrite something that may not even get to a rational multiple for 4 years?
What does Comcast trade for?
A beefy 1.5x.
If nothing else, the communication of taking a business that is an internet subscription business, basically what Comcast is, and being able to credibly communicate 50 times the revenue multiple. You gotta give them credit for the investor relations of this all.
You do, but like I think that there's a case to be made that they also have the strongest moat of any company out there because they're responsible for 85% of all the space missions and launches that happen today. So what else could you put into space? Like I said, I'm not a rocket scientist to know what is better in space than better on Earth. I like it here on Earth personally. But if there's something valuable to put up there, they're the only way to get there, right?
Well, Bezos, I think, will be betting that they can give a run for their money. But yeah, I mean, having the monopoly on that gives him a lot of flexibility. So if one of his bets doesn't pay off, he has a lot of other options. And it's nice to have a monopoly on something that's important.
Wouldn't it be wild to be like, oh, we're the Uber of space travel?
All right. So this could be valued at a lot of money. And I think that if I'm an Anthropic, I actually probably want SpaceX to go public first and get this kind of valuation because that makes Anthropic look like maybe a $4 trillion company.
I have two wrinkles that I think could, not artificially, but could structurally boost the share price of this, Kyle.
What are they?
The first one is they've changed the rules on what's allowed in the S&P 500 to make it so you only have to wait 15 days. And so if it's allowed in the S&P 500, think of like Magnificent Seven. This is going to be definitely within that. And it's going to be included in a lot of ETFs and therefore people's 401k plans.
So you think this helps valuation because it just gives them a lot more capital access?
Way more surface area, and it's going to get picked up by these mutual funds that like they know it's in there, but it wasn't like the sole reason why they were buying it.
Right. So it's more like, not to say dumb money, but like money that's kind of insensitive to what the price is. It's just including it as as part of an index.
Exactly. It's part of a broader index, one that you would want to be in where the probably largest pools of capital flow because it's like all these 401ks and pension funds, right?
That's one potential wave. What was the other one?
The second thing is the allocation they're making for retail investors. So typically in an IPO, only maybe 10% is allocated for people like you and me to buy. I think it was when Figma went public. Everyone was complaining that on Robinhood they couldn't buy any shares because there wasn't enough float. They'd be like, oh, I put in an order for 2, I got 0. For this, they're allocating 30% to retail investors.
So is this a meme stock? Is that what you're saying?
Yeah, they're betting on people not doing their homework and just like stupidly saying, I love Elon, I'm going to buy up the stock, buy. And he also has a massive incentive to get the market price up because he gets bonuses based on how much it's worth. I think he has a huge payout at $7 trillion. So it's not going to definitely hit that on day one by any means. But this does give them a cushion or maybe a push by people who may not be the most rational investors in the world and want to hype it up.
And who he can access through owning a social media platform. He can hype up his own stock. I know you disagree with me, CJ, or I think you disagree with me, but this to me feels like GameStop meets Comcast meets like just market insanity.
Space, Kyle, space. A lot of this gives me the ick, but the subscriber growth of Starlink and the number of people who could potentially access it around the earth, it's 8 billion people could potentially access this. That is what gives me maybe the upside case, and also the fact that like if you own the only road to get somewhere, I would love to collect a toll on it. Like I'm buying that stock.
You just love the 63% EBITDA margins on Starlink.
I do.
It's your love language.
Love it, hate it is going to be the largest IPO that's ever occurred.
All right, well, we'll see how it turns out.
Mostly Growth is a Mostly Media production. Executive produced by Ben Hillman. That's me. Additional production by Steve Sarasoli. Nothing said on this podcast is intended to be business or investment advice. It's the sole opinion of CJ, Kyle, and Ben. Just some guys who love talking growth. Mostly. If you like this podcast, hit subscribe and give us 5 stars. It only takes like 2 seconds and our algorithm overlords love it. Drink water, call your mom, and have a good day.